Over the course of the last 18 months, the hottest topic in mortgage and real estate has been the rising interest rates. I get asked all the time about how these rising interest rates are impacting the housing market. And in my opinion, the three biggest impacts to housing today have been on affordability, inventory, and continued home price appreciation. From an affordability standpoint, obviously when interest rates go up, so do mortgage payments. So far this year, buyers have lost about $75,000 in buying power. Your average mortgage payment's up about $400 a month. And mortgage payments year over year have increased about 20%, largely due to interest rates, but also because home prices have continued to gone up, obviously making a huge impact to buyers. In fact, we've seen about 30% less mortgage applications this year because people that cannot afford the housing market have taken themselves out of the game. Inventory is down 30% so far this year. The reason being is 89% of current homeowners have an interest rate under 5%. There's a lot of people out there with rates in the 2s, 3s, and 4s. When considering a new house at the new prices, taking on interest rates at 6, 7, or 8%, the mortgage payment is just too much of a difference for them to consider listing their house. So they're staying put and renovating their existing homes. And lastly, home price appreciation. Home prices are already up 4 to 5% so far year to date in 2023, and all the forecasts have us finishing the year somewhere between 5 and 10%. Now that's the opposite of what everybody thought was going to happen. When rates went up, a lot of predictions had home prices stalling out and even coming down. Since COVID, home prices had appreciated almost 40%, so we thought we'd see a slowdown, but mostly due to low inventory, all-time low levels actually, we're seeing home prices continue to appreciate as buyer demand has remained very strong, and a lot of people have boxed out of the market now for a couple of years, and they're still going strong. They're adjusting their budgets in the face of higher payments and higher rates, and still staying bullish on housing.